Hey everybody, how is it going today? Welcome to the channel. In this video, I'm going to be doing my M1 Finance Portfolio Review for the month of August 2021. Okay, welcome to my M1 Finance Portfolio Review for the month of August 2021. I'm actually recording this on September 20th, so I'm a little bit behind. I usually like to record these in the first week of the following month, but been on vacation for a few weeks, so I'm trying to play catch up on everything. But you know what they say, better late than never. If this is your first time watching this series, this is my journey to try to get to $100,000 by the end of 2025. So if you are interested in following this journey, following this account as it progresses, please hit that subscribe button. And if you are interested in opening an M1 Finance account, and I do think that M1 Finance is one of the better investment vehicles out there, there is a referral link down there in the description. If you use that, we will both get the referral bonus. The referral bonus changes from time to time. Not sure what it's at right now, but if you're going to open an account, you might as well get something out of it. But let's get back to my account right now. Last month, my account had a money weighted return of 102%. Now, as we can see, it has fallen all the way down to 75%, but I bet a lot of that damage is today. And my portfolio had an account value of $27,434 in the last video. And right now it has a portfolio value of $28,444. Now, if we look at the monthly numbers, we can see that the account is down $344 for the month and is down a little over 1%. But I bet a lot of that damage is, has been done today. Actually, let's check at the 1 day. And as we can see, it is down $830 today alone. So I was actually up over the last 30 days until today happened. But today is one of those days where the market is down 2%. So I took advantage by sending in an extra deposit. Not worried about the day-to-day fluctuations in the market with this account. This one, I just want to take advantage when the market does have a big down day. But let's go down to the portfolio and look at the holdings. If we go down by size, you can see my biggest holding is Tesla, followed by Square, and then Disney, then O Realty Corp, and they are, of course, a monthly paying REIT. So they are a very nice monthly payer to have in your portfolio. That is followed by Palantir. Palantir has been red hot over the last couple of weeks, even though it is down today, down with the markets. But Palantir, I have Palantir in several of my accounts, so very happy with my Palantir holding. That is followed by Verizon, Simon Property Group, LTC Properties, which is another monthly dividend-paying REIT, and I believe their yield is right around 6.5% right now, so that is a very nice monthly payer. Followed by Health Peak Properties, which is also a REIT, then Dominion Energy, Apple, Skyworks Solutions, Alibaba, AT&T, CRISPR Therapeutics, Baidu, Carnival Cruise Line, 3M, followed by Microsoft and the ARK K Fund. There is Illumina, Snapchat, Waste Management, Grow Generation, Goldman Sachs, the Vanguard High Dividend Yield ETF, Magellan Midstream Partners, Uber Technologies, and Dutch Brothers. Dutch Brothers is a new addition. I'll get into that later. Then followed by Vanguard Total International Bond Fund. But if we scroll back to the top, let's take a look at the biggest winners for the month. Let me click on the monthly gainers here. And actually, my biggest gainer on a percentage basis for the month is already Dutch Brothers. It's only been in the portfolio for a day or two. But surprisingly, my second biggest winner has been Baidu. The Chinese stocks have been getting absolutely crushed, and I'm actually higher on Alibaba than I am Baidu, but Baidu is by far outperforming Alibaba lately. The next one is Palantir, which I was saying has been performing very well over the last few weeks, and that chart was looking really good before the pullback in the market today. Next is Tesla. Tesla looked like it was getting going as well, but now we have this pullback in the market, so there's been some damage to the Tesla and the Palantir chart. So we'll see if if it can, get back going and break above those levels that it was just a couple of days ago. Carnival Cruise Line has rebounded. They were one of my biggest losers over on the last video, followed by Disney, which was up 1.5%. But let's flip it around and look at my biggest losers for the last 30 days. And as we can see, this is actually no surprise to me. Grow Generation is my biggest loser. That stock has been getting absolutely hammered, but I have been adding more of that as it's been going down. I do think that they have a lot of growth ahead of them in the future, so I am happy to be adding some more Grow Generation. Grow Generation just kind of went too far too fast, so it was destined to pull back. And, when the thing was going on its blow-off move, I was not adding more. I was waiting for a pullback, and we are getting that now. That is followed by Illumina. Now, Illumina made the Grail acquisition. I don't know if you saw that in the news or not, but even though Grail is a fantastic company, I think that the market is interpreting this as it's probably not going. The regulators are probably not going to let it go through. So it's gonna be like a basically just a wasted acquisition, and that's not good. It's a lot of money down the tubes if it doesn't go through. But that is followed by 3M, Dominion Energy, and O Realty. So these are all dividend payers, 3M, Dominion Energy, and O Realty. So I'll be taking advantage of these pullbacks and adding to these and, increasing my monthly dividends in the future. All right, and getting into what I alluded to earlier, there has been an addition to the portfolio, and I added Dutch Brothers, and Dutch Brothers just came public a couple of days ago. Normally, I would never buy an IPO. IPO stands for it's probably overpriced, and Dutch Brothers is definitely one of those that have come public and are way overpriced. But I've just added it to a 1% weighting to the portfolio, and if the price comes down, which I expect it to, once the hype dies down, I'm going to raise that up to probably 2 or 3%. But if you haven't heard of Dutch Brothers, and if you're on the East Coast, you might not have. I don't think they're on the East Coast just yet, but every time I go out west, my kids have got to go to this place, and I'm telling you, the lines are so crazy long every single time. It's just murderous trying to wait in line. And I'm one of those people who are highly impatient, so it just drives me crazy waiting in lines too long. This is like going to the DMV. But I've probably been to 12 different locations in like 3 different states, and every single time I go, this place is just jam-packed. And I remember earlier in my investing career, when I had opinions, and I kind of like to be a little bit of a contrarian investor, and the way people just flocked to the Apple products, it just kind of annoyed me. Like when you saw all these younger kids, sleeping outside of an Apple store overnight so they could get the new phone the first thing in the morning. I don't know. I just thought that was kind of stupid. But instead of thinking about it logically and saying, you know what, this is a big supply-demand imbalance here. There's a lot of demand for these products. You need to be a shareholder. And, I would go to the mall on like a weekday at like 10:30 in the morning, and the mall would just be dead, but the Apple store would be jam-packed, and I don't know why. It was just because of my own personal bias. I always told myself that if I run into those companies again that have crazy demand, I'm just going to be a shareholder of the company. And that's the case with the Dutch Brothers. And even when we are in the Arizona locations, when my kids got to go get one of these, I try to plan it so I'm getting there like mid-morning or, early afternoon, thinking I'm going to be avoiding some kind of a rush. And, it's just, you just can't do it. It's always jam-packed. The lines just take forever to get through. But if you are ever annoyed with long lines, become a shareholder in the company. And you know what? You don't mind those long lines nearly as much anymore. But that's why I added Dutch Brothers to the portfolio. If you haven't heard of this company, I strongly suggest checking them out. And if the price does pull back, buying at these levels, it is pretty expensive. I expect to pull back. I'm not going to be adding this to any of my other portfolios, just 1% to this M1 account. But if it does have a big pullback, I might consider adding it to some of my other accounts, some of my other trading accounts, and, take a position in this one for the long term in one of those accounts as well. But let's get into the charts. All right, so let's get into the charts, and the first one I want to start off with is the S&P 500 because we're having a massive down day in the market. You can see there's a lot of technical damage done right now. It was just barely hanging above that 50-period simple moving average, that blue line on the chart, and that has gapped down below it in a big way, and that is a very bearish sign for the overall market. As you can see, it has found support at that 50-period simple moving average every single time, going all the way back to probably November of last year. It got just barely below it in March, but then had a quick turnaround, and you have to go all the way back to September of last year before we broke below it. And it didn't really have a super strong break below it, and only hung below it for a couple of days or so before it got back above it. And then, of course, it had another dip in early November before having a sharp move back above it. So it's going to be interesting to see how this plays out. If I had to guess, I'm thinking we're going to get some more follow through to the downside. Number one, just because the market has been so weak over the last couple of weeks, I just would expect some more downside. And number two, we just haven't had a big correction in quite a while. I mean, having 10, 12, 15% corrections in a bull market, they're normal and they're healthy. And honestly, that's going to be a very welcome sight for me because stocks have just been getting so expensive over the last year. If I get an opportunity to grab some good names at some lower prices, I'm definitely going to take advantage. I'm kind of expecting this pullback to be more like the one that we had in 2018. Let me see if I can go back there. I don't expect the the COVID style type collapse. But if we go back to like 2018, the end of 2018, this is kind of more what I'm expecting. I don't know if it's going to be this deep, where it got super, super steep right before January of 2019, but I'm expecting a little bit more of a deeper pullback. I don't think it's going to be the end of the world, but if things happen the way I'm thinking, I think it's going to be a great buying opportunity. I think we are in year 2 of an uptrend. So historically, that's been very choppy, and there's usually a couple of really steep pullbacks, and I think this might be one of them. If it is, I'm definitely going to be a buyer. If we do have one of these V-shaped recoveries, then hey, just keep adding like I normally do and stick with my longs. But I just wanted to go over the S&P 500 and the overall market and just give you my thoughts on what I think could be happening. I do have some downside protection. I do have a position in the SQQQ. So if the market does, have a steep rollover, I'll be making money with that trade, and hopefully if we do have a big pullback, I'll be able to turn that trade into a pretty sizable gain, and I'll have a nice pile of cash when everything else has pulled back, that I could put to work hopefully immediately. But let's go to that Dutch Brothers chart. The ticker symbol is BROS. And as you can see, Dutch Brothers is just having a very strong day, up 18% on a huge down day in the market. So that's just showing you how excited investors are to get into this stock. Now, what I'm expecting Dutch Brothers to do is probably trend higher for the next couple days, maybe to the next couple of weeks, and then eventually, taper off and start a downtrend once all the hype kind of dies down. That's how these IPOs usually work, especially like the overhyped ones. Sometimes you'll get, a multi-week run right off the bat, but they usually do taper off. And if you look at most IPOs 6 months later, they're almost always lower. So if you want to be a shareholder in this company, it wouldn't hurt you at all to be patient. But like I said, with my M1 account, I'm just going to put it at a 1% weighting, add a little bit every single week. And, if the stock does have a deep pullback, then, I'll up the weighting and, hopefully grab a decent sized chunk, at some lower prices. But that is what I am seeing in the market right now, guys. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.